Good morning and welcome to the Coinbase Institutional Markets Call. My name is Ben Floyd. I'm Head of Execution Services here at Coinbase and I'll be your host for today. It's Tuesday, the 18th of July, just before lunchtime. It's a relatively sunny day in New York. We are in the middle of summer, but as you know, crypto does not take any breaks and we've had a really busy week with a ton of news, which we are going to cover today. Obviously, the big news last week was Ripple, and we have a special guest, Jordan, who's going to join us and talk us through that. But before we get to our agenda, if you look on your screens now, if you're watching on YouTube, or if you look in the show notes, if you're listening on podcast, we have access to all of the great research that David and the team puts together via the Coinbase Research and Insights Hub. So if you're watching, scan the QR code. If you're listening to a podcast, look in the show notes. But to our agenda. So we're going to start off with Jordan, who's going to take us through the XRP ruling and also provide us a bit of a reminder on the ETF process. We're then going to hand over to Georg for a run through on fund flows, BTC and ETH dominance, and also some comments from a rather important person in finance. We're then going to run through David's section, and he's going to run through the inflation print from last week, the Fed meeting later on this week, and also some economic data coming out of China. Greg is then going to run us through flows pre and post the Ripple news last week, and also what's going on in the options market. And then lastly, we're going to finish off with Tammy, who is in for Sid this week, who's at ETHCC. She's going to run us through an update on custodial and non-custodial stablecoins. But without further ado, Jordan, thank you so much for joining. There's been a ton of news this week, and to be honest, this year, in and around the regulatory side of things. And there's a lot of words that, quite frankly, I don't always understand. So super helpful to have you here to help us understand exactly what's going on. But before we start going into the details, can you just provide us a quick overview of your background and what you do here at Coinbase?
Yeah, well, hey, Ben, great to be with you. I am a senior counsel in our product organization. I cover both our institutional and retail business. I started my career as a securities enforcement attorney. I did that for about 6 years, and then spent 4 years inside a bank in a regulatory role before coming over here.
Amazing. So that feels like the perfect background to really break down what happened last week. So starting with that, like the Ripple ruling, like how should we think about that?
So the top line is that XRP itself was held not to be a security. Sales of XRP via exchanges like Coinbase are also not securities, and payments in XRP to employees and third parties were also held not to be securities.
Amazing. So that feels pretty positive, and I think that explains a lot of the price action we saw in certain assets last week. I guess, what does that mean for other assets? Like, what's the read across for other things going on in the space?
Yeah, I think it's pretty important for other assets, right? It means that secondary market transactions in digital assets, including retail and institutional crypto transactions, don't necessarily qualify as securities transactions. What the court affirmed in this ruling is that they will look to the facts and circumstances around the transactions themselves. XRP is the technology, as are the technologies that underlie a lot of other tokens. And so it's important to look at the transactions themselves and not classify all digital assets as securities.
Amazing. So it feels like there's some real nuance and understanding to kind of the case there. I guess, what does an appeal process look like? Can this go to a higher court, or is that done now?
Yeah, so there are avenues for appeal. This ruling was on motions for summary judgment, which is pretrial motions, basically asking the court to rule as a matter of law on the facts that are present. The rulings themselves are final decisions and are thus no longer at issue in the case. However, there was a discrete issue that was reserved for trial, this question of aiding and abetting liability. And because there's still a discrete issue that's live in the case will need to proceed to trial. And so there is no final judgment yet for the SEC to appeal. And I think they likely will want to appeal. There are possible opportunities for the SEC to appeal before final judgment, but it's a very high bar for them to be permitted to appeal. Ultimately, when they have their opportunity to appeal, it will go to the Second Circuit Court of Appeals. And there they're going to examine whether there were errors of law in the ruling. And I think because this was such a well-reasoned and thoughtful ruling, it's again a high bar to succeed on appeal. Until then, this ruling stands. It's not binding on any other courts, not binding on other judges, but it is considered persuasive authority. Again, I think especially so because it is so well reasoned and analyzed.
Interesting. So you mentioned a trial there. Like, what would a trial look like? And is there any chance of a settlement?
There's always the potential for a settlement. A trial here, first of all, won't happen right away. Again, Judge Torres has a very busy docket, and scheduling trials can take some time. It might not even happen before the end of this year. But the trial is going to be on a very discrete question as to aiding and abetting liability for the one category of transactions that were deemed to be securities transactions. And those were the transactions that were sold to institutional investors via investment contracts.
Interesting. And for that particular one part, which is going to be focused on, let's say the Ripple that goes against Ripple, what would happen then? Like, what are some of the potential consequences of that?
Yeah, so potential liability there for the individuals that are named in the aiding and abetting charges. But in the broader context, XRP is not a security unless that is overturned on an appeal. That is going to stand.
Fantastic. So it feels like for at least for the remainder of the year, we probably aren't going to hear too much more out of this. But towards the start of next year, when they can get it back on Judge Torres's docket, that's when we might hear slightly more about the aiding and abetting side of things. Is that a fair understanding?
Yeah, there certainly could be procedural rumblings in the case, but I would say that the next big show will take place when there's actually a trial date set.
Got it. Interesting. Great. Well, so a lot to digest there. Thank you very much for breaking that down. Always pretty complex, the stuff going through the courts. I guess next thing, given it's been busy in this area as well, is I just have to understand, like, from the news that we got around the BlackRock ETF. We had Brian on last week talking about it. Like, what is the kind of process and procedures look like there? Like, what are some of the other things we should be looking out for?
Yeah, so the SEC's acknowledgement last week indicates the commencement of the official review process for BlackRock's ETF proposal and a number of other ETF proposals that the SEC acknowledged at the same time. So this starts a procedural clock. BlackRock's application is now officially on the SEC docket. It's open for public comment for 21 days. And the acknowledgement appears to indicate that the SEC's concerns over market manipulation and fraud have at least been addressed at a threshold level for the SEC to now consider the application.
Interesting. Is this the first application they've actually kind of recognized?
It is, yeah. These questions about market manipulation and fraud date back several years. And this requirement for a surveillance sharing agreement is not new. The SEC first surfaced such a requirement when it denied the Winklevoss Bitcoin ETF in 2017. And it's clear it's been an important issue for the SEC because they want to be able to surveil the market for fraud and manipulation, and they need access to data in order to be able to do that. The current crop of applications, including the BlackRock application, appear to attempt to address some of those concerns by including the surveillance sharing agreement and perhaps other agreements to share information with the SEC so they can conduct their surveillance.
Fantastic. So we now have a 21-day comment period, and then after that, we expect to hear from the SEC, or I guess what is the maximum number of days that they have to respond, essentially? Yeah.
So these get lined up on the SEC's docket for rulings. The first up is actually ARK Invest. They have an ETF application that the SEC should be making a decision on by mid-August. And then we can expect BlackRock and some of the others thereafter. It's not a guarantee that we'll have a judgment. There could be other procedural steps, but I would think it's reasonable to expect that before the end of the year, we will have a decision from the SEC on at least some of these applications.
Wow, that's great. And then from that perspective, as soon as they have a decision, they could technically go live straight away, if I understand the
if they're approved.
Great, Interesting. Okay, cool. So somewhere between mid-August, it sounds like ARK Invest will be the first we'll hear from, and then BlackRock and others shortly thereafter. And should they be approved, then they could go live straight away, potentially.
They go live for trading.
Amazing. Fantastic. Well, Jordan, thank you very much. I know you guys have been super busy, so I appreciate you taking your time out to help us understand what's going on. And I have no doubt we'll probably have more rumblings that we're needing to understand more from you soon. So I'm sure we'll see you again. But thank you very much for joining. Appreciate it.
Always happy to spend some time breaking it down with you guys.
Cool. Thanks, Jordan. So George, over to you. What have we seen off the back of these big news stories this week? How have people been trading, and what else has been in the news?
Yeah, thanks, Ben. Definitely quite the weekend. Super interesting news, as you say, with XRP, and then on the ETF side as well. And I think, as you say, these headlines have definitely been driving the market over the last week. With Bitcoin rallying up to almost $32,000, and ETH to around $2,000, Solana at the highs to $32. But having said that, obviously on Friday and over the weekend and into this week, the rally fizzled out a little bit and gave back some of these gains. Initially, the move was really all about altcoins, and I think the institution flow that we saw that Greg will touch upon later is definitely reflecting that as well. And the theme here was that essentially coins that previously were under more regulatory pressure post XRP ruling rallied the most. So some examples here are, for instance, XRP itself, which rallied more than 50% over the last 7 days. But we actually traded almost as high as $1 on it. And Solana is another positive example, for instance, that actually more than doubled from the lows just literally 1 month ago at the highs up to almost $32, and obviously giving back a little bit of that, trading between $25, $26 at the moment. You can also see that in the combined ETH and BTC dominance. Someone's down to under 70% again after trading above the 72% level. And one other interesting thing actually I saw in that context was VanEck. So they put out an interesting chart that they posted on Twitter, basically looking at the percentage of altcoins that outperformed Bitcoin over a rolling 90-day window. Now, just 1 week ago, that number was around 10%. That's the lowest level since Q4 2020. But this data set is actually, if you look it up, it's super cyclical. So I think a lot more people are watching the altcoin space now.
Interesting. Thanks, George. Just to go a little bit deeper on kind of some of the performance post kind of towards the end of the week. Obviously, we've given up a lot of gains in BTC and ETH. Like, what are some of your thoughts around why that might be, and what are clients saying?
Yeah, for sure. I think it's definitely taken a lot of people by surprise. I think if you look at the perp market initially, on the headlines on Thursday last week, total open interest across perps and futures as well went up by about $3.5 billion. So that's roughly 10% of the total open interest at that time. So it's quite a significant amount of additional open interest. But actually, by end of day Friday, because of the increased volatility, this surge in open interest has almost entirely evaporated. So I'd say one reason is definitely this increase in leverage and the subsequent washout of that leverage. So ultimately, technical reasons. And I think many also started wondering what the fair value is for some of these tokens, at least on a short-term basis, given that this was a very aggressive rally. And I mentioned Solana as an example, right? So that was trading before the regulatory headlines 1 month ago. I was trading at around $22, $23. Post-headline, the lows were around $13. And then actually after it, as I mentioned, we traded as high as $32. And now doing 25, 26, so still above that initial level. So I think that's probably the other reason. And then correlations I think still are low, but hearing more people looking across to equities again, and equities being under a little bit of pressure the last couple of days. trading or some sideways price action there. So that could potentially as well exert some pressure on risk assets.
Interesting. And zooming out a little bit, like looking kind of longer term, and I don't know about you, but I've had a ton of people ping me this week that aren't in crypto asking about it once again. It feels like it's really captured people's attention, and I've seen some big moves. And there's probably a lot of people that retail that have held XRP for some time. But curious, if we zoom out, looking at the longer term picture, I mentioned at the start we had some pretty significant comments from Larry Fink, who I'd say is probably relatively important in the world generally. Can you just run us through that, and like I guess your perspective longer term as well would be great to hear.
Yeah, fully agree. As you mentioned, the comments from Larry Fink, the CEO of the largest asset manager in the world, are definitely huge. Him saying that crypto will transcend any one currency, and that it's essentially the next generation for markets. It's definitely huge, and I think it's also quite an evolution in his view, as he was pretty negative on crypto. If you look back at some of the comments he was making back in 2017. But having said that, I also think he's probably not the only one that's changed their views of people in such high positions in the financial industry. So I'd say post ETF headlines, you can see quite nicely also that according to CoinShares, for instance, demand has definitely picked up over the last month with more than $700 million worth in inflows into crypto ETP and ETF products. So it's definitely, I think, at least is thinking back sort of the last year or so, or even longer, the largest continuous stretch of inflows into these products. And looking at the bigger picture, one chart I found interesting is if you overlay the last few Bitcoin cycles with the current one. So the first cycle there in blue for our viewers from 2012 to 2016, so it reached 100x at the peak compared to the price at the beginning of the cycle. And in red for our viewers, we've got the 2016 to 2020 cycle. The peak had reached roughly 30x. But I think the most important thing here is comparing the drawdowns in the previous cycle and where we stand in the current cycle, bar some exogenous unknown type of shock. The worst seems behind us, and we have the next halving that is coming closer. As we just heard from Jordan, we might have potentially a decision on a spot ETF, which is going to be huge for the market before year end. And then again, you get, as you say, like you get people that haven't been following the space starting to look at crypto again. You have banks like Standard Chartered that predicted BTC could go to 50K end of this year and potentially 120K end of next year. So I'd definitely say that the sentiment is starting to improve. So, and taking all of that into account, and with rates potentially coming lower and topping out over the medium term, I do think that we have a strong foundation for a bull market being made.
Heard it here first. George is bullish. We just need that yellow line to converge with red to start with, and then hopefully blue. I guess that the one thing, if you look back there, 2012, 16, that was the time to be in crypto. That was when your crazy gains were made. But at the same time, that's also where there's some pretty big drawdowns. So painful if it wasn't timed perfectly. Perfect. Awesome, George. Thank you very much for that fantastic rundown. David, over to you. What have you been looking at this week?
Oh boy, I would say that as much as George is bullish, and I agree with him over probably the medium to long term, I'm definitely constructive as we get into, say, like Q4. I'm a bit more defensive right now. And I say that because I think a lot of people actually tend to believe that we're in a bit of a Goldilocks scenario. We see inflation kind of coming down, but so far the economic indicators in the US at least have been fairly decent. But now I would say positioning actually kind of worries me. I think a lot of, say, equity bears have covered their shorts. A lot of people have kind of shifted over to that mode of thinking. And I think there's still a lot of risks in the system. Like a lot of people don't necessarily believe that we're going to get a recession in the near term, or that if it is, it might just be a soft landing, or not even kind of register. And I don't necessarily know if that's going to be true. I still think that the banking turmoil presented a lot of concerns. I think going into next week, for example, the Fed still seems fairly adamant about hiking rates, even though I think there is, in fact, a clear deflationary trend. That worries me because, like you have guys like Chris Waller, and granted, he's on the hawkish side, saying that they still need to do 2 more hikes. I just don't know if this is an economy that is going to need that. And also there are secular trends in play that they're not considering. Like the AI trend is changing productivity. It's changing lower input costs. So if you look at forward-looking data as well on the inflation side, it seems that like the rental costs are actually trending back to pre-pandemic trends. So I think taking it all in, I think very short term, I would just be cautious about playing this market.
Interesting. And I guess what else should we be looking for in terms of can help direct us as to whether or not we can change that caution into something a little more optimistic in the next kind of couple of weeks?
I mean, this is just broad macro, right? This isn't necessarily things that are happening inside the crypto space. I think crypto, we've seen, as you've kind of talked about, some of the more idiosyncratic kind of catalysts here that are supportive. And I think that when we're looking at the situation with regards to the Ripple case, I think now people are looking ahead to like the Grayscale case. Those are going to be definitely formative for what's going to happen in this space in particular. But I think, the global kind of macro environment is a lot more uncertain. For example, China right now, like the GDP numbers have come in really relatively weak. I actually think that this could be a call for, the authorities there to actually come in with more stimulus, but, you're not seeing a lot of people kind of play it that way. So, I think some of the more contrarian views are going to be stronger here than the trends that are happening at the moment.
And you mentioned Chinese economic data. When could we expect to hear or see something out of them? Or is it literally just you just have to watch the tape and wait?
Well, they've already been coming out with stimulus here. It's just that it hasn't been enough to move the needle. It hasn't been meeting expectations. And that's really been the issue, because you see that on several different places, like its property market hasn't been revived. Savings are still relatively low, but the Chinese government isn't willing to kind of step in here with any major fiscal stimulus. For example, the central banks has cut rates, but not deep enough for at least many economists to think that it can actually move the economy here. So it's really that presents concern. And I would say that I'm more on the side of, I think you've seen it already priced in to those markets. And if anything, there's a lot of more upside risk that they could actually deliver here.
Got it. Okay, so moving a little bit away from macro, you're at ETC at the moment in Paris. I want to cover that in a second. But before that, what are some of the key themes that we should be looking at for H2 of 23, like kind of crypto-specific things?
Yeah, I think George already mentioned one, but let's kind of take it in order. So first of all, if I think about Bitcoin, we still have to deal with some of the selling pressures coming from, for example, Mt. Gox. I've kind of said on this podcast before that I don't think it's quite the selling amount that people are going to be as concerned about. So it's not all 141,686,000 Bitcoin, for example. It's going to be probably selling of probably an order of magnitude of around 35,000. That's what I potentially calculate as estimate as max. But that's going to lead us into discussions around the halving, which George mentioned. Now the halving is going to take place in 2024, but I think people are going to look forward to it probably by Q4 of 2023. On the Ethereum side, I think very much we're going to be talking about Cancun Fork. That also seems to be more timed for first quarter of 2024 rather than the end of 2023. But the Cancun Fork is going to be a major change that's going to affect the scalability, the throughput, mainly supporting layer 2s by creating a new type on the on blocks, new data type. That's going to take us into account abstraction. And I think that once you see that the cost on these layer 2s really becomes cheap enough, that's when people potentially applications could actually absorb the cost of these things, and the process of actually using Web3 could actually be a lot more seamless. And actually, you talked about ECC. Vitalik, one of the co-founders of Ethereum, actually just talked about this on stage. So it was, I think it's on a lot of people's minds right now. Next to this, of course, is what's happening with layer 2s. And I think with layer 2s, it's really about value accrual. That's going to talk about decentralized sequencers, possibly shared sequencers. I think that's going to be a big topic. And finally, eigenlayer. Eigenlayer has launched on mainnet. Phase 1 and phase 2 has already passed, but they still aren't supporting services just yet. And we really need that to know what all the metrics around this are going to be.
Yeah, that makes a ton of sense. Greg and I were playing with Coinbase Wallet back end of last week. And we were able to send messages like you would on Venmo and send crypto at the same time. We were sending USDC on Polygon and it was free of charge. I guess it's cheap enough that it could be subsidized in whatever way, shape or form. And it feels like it's the first time that you're able to build Web 2-like apps and at the same cost, which is huge. One other thing, David, just for those viewers that may not be as familiar, account abstraction, we hear that banded around a lot. It's incredibly important. Can you just run through what that is exactly and what that allows us to do in the future?
So it's hard to talk about what it is more so than what it represents. And what it really represents, at least from a layman's perspective, is the idea that because every account is going to be treated as a smart contract, actually, you can see that, in fact, I can create kind of information barriers so that as a user, I don't necessarily have to, for example, pay gas fees for a transaction. In fact, those costs can be absorbed by another party. If that's the case, for example, one state of the future could be that as a decentralized application, they could say, you know what, every transaction is fractions of a penny. We just want people to actually start using this stuff and we want to onboard the activity. So in fact, we'll pay those costs. Don't worry about it. You just use the product and, it'll be like using Web 2 effectively. We can just transact on there without having to worry about, oh man, I need to have the ETH in my wallet and I need to have enough to make this transaction. I think that's the big benefit that you can take into account abstraction and building out that Web3 world.
I'd say that's so huge to have the requirement to have the native token in your wallet before you can send anything is such a blocker. It just adds that additional step, which can be enough to stop you doing it altogether. So you're in Paris. ETC Paris is a great city. ETC is a great conference. What's the energy like? How does it feel?
Yeah, ECC is mainly a developer conference. So it's great. It's kind of split up into 20-minute blocks for the most part, where you can kind of hear the latest in developments. And, you can, it's interesting to kind of get these ideas because people are talking about fully homomorphic encryption, for example, which is just kind of being built out. People are talking about EigenDA, the data availability layers there. There's still some of the old school kind of discussions, people having debates about the multi-chain theory of the world of the future versus a layer 2 driven kind of future. Still no consensus around which of those is actually going to materialize. So I just kind of love that energy. You kind of actually hear about the ideas. There's no discussions about are we in a crypto winter or not in a crypto winter? That's not part of the discussion here. It's really we want to build, and these are the cool ideas that we should be thinking about.
Yeah, I totally agree. I love those conferences. So many builders there, so much energy and cool ideas and optimism. So enjoy, and looking forward to hearing more on the call next week when you're back.
Thanks, Ben.
Cool. So moving on to Greg. Obviously, it was a week of before and after, Greg. What did we see on the desk, both before the news and after?
Yeah, it was obviously a very busy week on the desk. Before I get to flows, though, I just want to touch on something that you and George had mentioned, because it's a conversation, we've been having a lot with clients, and, that's, why hasn't the market traded better, since Friday? If we take a look, Bitcoin's given back all of its gains and then some, ETH has given back most of its gains. And, altcoins have held on to a majority of theirs. Sol, for instance, has retraced 50%. But still, we've seen some weakness there. And I think if we take a step back, on the surface, this all really makes sense. Bitcoin's status as a non-security was never in question. So it really shouldn't have been directly affected by the judgment we received on Thursday, or the summary judgment. The status of ETH was a little more uncertain, but it wasn't called out by regulators earlier this year. Meanwhile, Sol and some of the other altcoins were specifically named, as George said, so they had the most to gain. And so I think that's why we're seeing this real dispersion in returns. And I think what happened was basically the market got so far out over its skis so quickly that it had to cut risk when that momentum didn't continue through Friday afternoon. And I think we could see this most clearly in basis. It was as wide as 20% on Thursday as folks looked for levered exposure to crypto. And then it's collapsed pretty hard starting Friday. And, front month BTC basis right now is, around 5%. So I think that's really indicative of, people levering up, becoming very exuberant. And then when that momentum didn't follow on, just having to cut risk. And now we're seeing some of those positions flushed out. So, that's just one view, I think. Our flows on the desk, in a way, mirrored this. We saw aggressive buying Thursday and early Friday, almost no profit taking. And, this is in contrast to sort of the flows we saw before Thursday's news, in that, we would see kind of better two-way flow, folks putting on positions, then maybe taking some chips off the table, rotating kind of through the complex. Thursday, Friday, it was very one-sided. Thursday and early Friday, I should say. Just better to buy kind of across the board. Over the weekend and kind of through yesterday, very different story. Kind of saw de-risking again across the board. Not aggressive, but we saw it in both the alts as well as BTC and ETH.
Interesting. And I guess people are scratching their heads across the space to figure out what the next move is. Like, we're now just south of 30K in BTC. We have seen a bit of selling on the desk. Like, where do you think we go from here, and what should we be looking out for?
Yeah, it's I think if we could regain 30,000 in BTC, that level is, purely psychological, but it's crypto's, bellwether. So it's what everybody looks at. And I think that would definitely help the complex. Speaking again to clients, I think I haven't come across anybody who's outright bearish and, looking to get short here. I think the theme is, hey, I'm cautious. I'm looking to add, but at lower levels. So I wouldn't expect a ton of downside from here, barring some exogenous shock.
Interesting. So it feels like a lot of the leverage has come out of the system. There's not a ton of people looking to sell. Maybe we drift lower, but there's certainly some support low down as people look to buy in at slightly cheaper prices. Is that roughly fair?
Yeah, I think that's a great characterization.
Perfect. And what about the options market? I know you keep a close eye on that. What's that telling us?
Yeah, so options market did what we would have expected right after the news. We saw, pretty good upside buying in both BTC and ETH. July 32,000 strike Bitcoin calls were bought in pretty good size. July 2,000 to sort of 2,200 strike ETH calls were bought as well. What's surprising, though, is that the entire volatility term structure is lower today than it was a week ago. Given the news, I would have expected it to be bid up, but that's just not the case. And if you look at skew, that's back at flat for both Bitcoin and ETH. So the options market just isn't excited about last week's news, or at least it's not as excited as I am.
Nice. And what else are you keeping an eye on? Anything that's piquing your interest?
So we're in the middle of summer. Liquidity is generally lower now, which means that we can have these outsized moves. both the up and downside. So, really hard to predict which move is going to come next. I think, on our desk, we're just, ready to react. So not really sure exactly what we're going to keep our eye on next. I wouldn't have expected the ruling that we got, last week, but we did. So yeah, it's kind of hard to say at this point.
One thing we can always be sure of is that there will be something. So we just have to wait for it. Awesome. Thank you, Greg. Great insights as always. Tammy, would love to bring you in here and welcome you to the call. Thank you for joining. I guess, first of all, do you want to just give us a quick bit of background on who you are and what you do at Coinbase?
Thanks a lot, Ben. I'm a blockchain researcher at Coinbase, specialized in blockchain analytics. I joined the company in mid-2021. Before joining Coinbase, I worked as a credit risk quant for a bank in London for 4 years.
Cool, amazing. Well, welcome to the call. And you've certainly seen the vast majority of this cycle. So stablecoins is something that I know you want to touch upon today. I'm curious, can you maybe just start with a bit of an overview of the kind of stablecoin market?
So I think when we are looking at circulating supply on Ethereum for stablecoins, as expected, the market is dominated by custodial stablecoin like USDT and USDC. Sometimes they also refer as the centralized stablecoins. The top 3 stablecoins in terms of the circulating supplies are USDT, which has around 39 billion on chain. And then USDC has around 25 billion on chain. And DAI, as the largest non-custodial stablecoins, took up the 3rd place, has around 4 billion supply circulating on chain.
Interesting. So I guess USDT is the OG, and then I think we had DAI was launched, and then USDC, and as you correctly pointed out, that's the majority of the flow there. I guess what are some of the pros and cons of a custodial stablecoin versus a non-custodial stablecoin?
The custodial stablecoins requires trust in third parties. For example, like Circle and Tesla, they act as the custodian of the stablecoins reserve and control the token issuance and governance process. But for the non-custodial stablecoins, they replace the trust with the economic mechanism and implement it through smart contracts. I think that's also why one of the reasons why the current market is dominated by custodial stablecoins, because they are easier to understand with the concept for 1 USD for 1 stablecoin, for example, and it's easier to use. For the other side, it is very difficult to understand the complex smart contract structure and then the logic around the economic mechanism built for the non-custodial stablecoins. The past failure in stablecoin project like Terra didn't help to gain users' confidence too. It's a relatively new concept, and we can still see new ideas and new designs emerging in the space. I think it will take time for the market to adopt, and for the economic to reach higher degree of decentralization and to be more independent from the centralized parties. Non-custodial stablecoins are actually one of the keys.
Yeah, that makes a ton of sense. So we had some news this week with Aave releasing Go. I think I hope I've pronounced that correctly. I'm curious, what are some of the key strengths and innovations around some of these new stablecoins?
Yeah, in 2023 in general, we also noticed new non-custodial stablecoin being introduced to the market. These are the 3 that up and coming ones being discussed the most frequently. First one is the Go. It's developed by Aave, the lending protocol. It launched at mainnet around 3 days ago, and it already reached 3 million supply. Then is the Curve USD. It's introduced by Curve, the DEX protocol. It was launched at mainnet around May this year. Its supply has reached 20 million. Then the last one is Gyro Dollar. It's built by Gyroscope. Their research team has predicted the ultimate failure of Terra back in 2021. It had the proto launch at Polygon, and the liquidity pool achieved like 3 times volume compared to other state-matic pool with only 1/7 of the asset. So what's new in this design at a very high level? The new stablecoins also contains the leverage-based component and the swap-based component to keep stablecoin in pack. Of course, many of them have other designs for stability too, but these are the two key components. The current version of gold works very similarly with DAI. Users borrow gold based on assets on Aave. They will also have their swap component called GSM that enables users to swap stablecoins for gold later. It will start with a fixed pricing strategy like the PSM of DAI. And then later, DAO may decide whether they want a more dynamic strategy and set a limit on its exposure to assets. I guess that's the reason, that's the lesson they learned from DAI during the temporary USDC depack in March. The real innovation is actually in Dollar and Curve USD. Gyroscope proposed a design to improve capital efficiency by allowing users to borrow on LP positions. For example, stake ETH from Lido or Rocket Pool can be supplied to the liquidity pool to earn additional yield. The liquidity token can be used to borrow Dollar. And for its swap component, their DSM can automatically limit the exposure to asset or manage the run risk by automatically adjusting the redemption rate in contingency situation. And for Curve USD, they introduced a new Llama mechanism to automate liquidation in a smooth way, so that borrower won't lose 100% of their positions right after the collateral ratio falls below threshold. For example, like a user borrow Curve USD by depositing ETH. If ETH price decline, Llama will gradually convert a portion of the ETH to Curve USD. If the ETH price recover, then the cash may be used to repurchase the ETH for borrower. And if ETH falls significantly, then the entire collateral may be converted into Curve USD.
Interesting. So it sounds kind of like we've got a few new stablecoins that are all launching. They're trying to get TVL. Is there any kind of rewards-based system around this? Like is the Aave DAO or the Curve DAO trying to incentivize people to use these new stablecoins?
Yes, for Gold, like the Aave stablecoin one, its main strength is it's born to the Aave ecosystem. So a user can borrow Gold with stake Aave at a discounted price. And they also propose this new structure called the facilitator strategy. So facilitator on Aave is the one oversee the Gold issuance strategy and process. So they will encourage the facilitator in the future to be creative. And for Gyroscope, as I mentioned that user can leverage on stake ETH LP position. So that means they can earn additional yield by supply their stake ETH into the liquidity pool. And for Curve USD, it's similar to Aave. It's born to the Curve ecosystem.
Cool, awesome. So if I'm a user of, I've got my staked ETH with Aave, I borrow Go. I guess what is the rate that I'm borrowing Go at, and is Go pegged to the US dollar?
Go is pegged to the USD dollar, but I'm not quite sure about the current borrow rate at the moment. I think.
Interesting. I would imagine it's going to be subsidized to incentivize me to use that versus borrowing USDC, which is probably going to be in like the 4 to.
I think on the proposal, it depends on the amount of stake Aave you earned. The amount of stake Aave you hold. It's the discount rate you receive for borrowing Gold is different.
That kind of makes sense. Like if you're with your bank and you hold a large amount of assets with them, then your mortgage rate is lower. So it kind of incentivizes you to hold assets there. Well, Tammy, thank you so much for joining. Really, really appreciate your time, and I'm sure we'll see you again soon. That is a wrap for this week. Thank you all very much for joining. If you have any feedback, please let you know. And otherwise, we'll see you next week.